Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about the week's topics, news. It could be things on finance, taxes, business, or really none of the above. But what's always the case is that it's from the perspective of accountants. And with me today is Tammy Hess.
Hey, everyone.
And Charlie Zigmund.
Hi, everybody.
I'm Ty Carr, and what we have on deck today, Martin inflating the cost of malaria drugs. Is this indicative of our business morals? Amazon price hike. Do we care? Local PPP fraud didn't result in a loss. So is punishment still warranted? AI-powered tax platform. Is this creating a market or just better serving an existing need? And finally, baloney face masks. Need I say more? All right, let's kick this off. I'm going to kick it over here to Charlie.
All right, so I've got an article we can talk about from Newsweek called Martin Shkreli Gets Lifetime Ban from the Pharma Industry for Inflating Cost of Malaria Drugs. And so I'm sure you guys have heard about this, but just for those who aren't keeping up on the news, basically there is a drug that his company, who he's the CEO of, has been making, and they've been selling it, and it a couple of years ago, it raised in price from $13.50 per tablet to $750. And he basically used that to generate a large amount of profit, and then ultimately basically took that profit from the company. And so, you know, it's looking at a couple of different things that have happened in relation to that. He's been sentenced and has agreed to provide the company has agreed to provide up to $40 million in relief, $10 million to be paid immediately, and then $30 million over the course of 10 years. He's serving a 7-year prison sentence for defrauding investors of $10 million. And the drug name is I'm going to probably butcher it, but I believe it's Daraprim. It's an anti-parasitic medicine that is not only used for treating malaria, but also toxoplasmosis. Company name was Turing Pharmaceuticals. And it later changed, I got a kick out of this, it changed its name to Viera when it began to inflate prices. So just to kind of, we sort of know something weird is going on. We're going to go and just change a name now, get a fresh slate, then do all the terrible things we can think to do. And so I guess, I try to look at, okay, well, this is great, right? Justice happening, but how can we kind of use this to think about our everyday business operations? Because I know a lot of the businesses that we work for are posed with kind of moral dilemmas as they're going through their day, when just trying to struggle to balance sort of the profit motive and really what their moral obligations are. And so I guess I wanted to just take this as an opportunity to kind of ask if there's any advice for operators who are struggling with maybe not something to this magnitude, but maybe a differently sized moral quandary as it relates to the profit. And then kind of just a second question on it was that the article makes a big deal about the price being a relatively high percentage of what the prior price was. And I think that obviously makes a lot of sense, but it just makes me wonder if there should be regulation that's geared around that logic. If it's a problem when a drug price triples, can we set up regulation that would stop that specific event or put some sort of put some boundaries on how quickly a pharmaceutical company could raise its prices? So what do you guys think?
Yeah, so I have a couple of thoughts. I remember when this trial was going on because I don't know if you guys watched the trial at all, but the smug look on this gentleman's face all throughout the trial just set me it got me really angry in general. But I think in terms of price, when you're selling a good or service, you do have to look at profit. You do have to kind of consider what is someone willing to pay. And, is it quote unquote fair or not, or is it justifiable in terms of what someone's willing to pay for a certain product or service? I think where this one becomes a little bit more tricky is when you're talking about medicine and pharmaceuticals, where someone needs it, the value of that particular medicine or drug kind of, it's not necessarily because of want or desire or whatever. It's like the need. It could save a life. It could be utilized to, for symptoms or, for things that they're experiencing. So to do that and be like, oh, so if someone's willing to feel better, they're going to spend $1 million per pill. Let's go ahead and do that. That doesn't seem morally right or, ethically right. And so it's one of those things where when it comes to pharmaceuticals, it's not what is someone willing to pay for it. It almost like we are used to paying higher costs for certain brand new drugs to cover the cost of research and development and things that are attributed to pharmaceuticals. But in this particular case, I think just having a price increase just because you can, that's where it becomes extremely dangerous and probably doesn't, serve anybody well on that. So I think really looking at that in terms of pharmacy, I think it's a much different type of price review and analysis that one would have to do when it has to do with people's health.
Yeah, I see it that way. I mean, from a framework, I think there's kind of two different questions going on here. And one, if I, take the last part of Tammy's comment there in terms of, in a public health scenario, there are certain things in our society that I think not everybody agrees with this, but I would propose are not really the subject of just bare knuckle capitalism. And I think that's my way of describing perhaps part of what Tammy was getting at there, in the sense of, while a pure supply and demand analysis might suggest you can charge a huge price for something in that scenario, the society shouldn't allow that in that particular case. And I feel that way because I would point out that as a society and as a country, for example, we invest public money in research and development through providing tax credits and through our university systems and the infrastructure that we have that basically supports an environment that allows companies and entrepreneurs and people to develop these things. And so, on one hand, you hear a lot of discussion about, well, you've got to provide a big reward to drug makers in order to incentivize them to create these valuable life-saving medicines, and I think that is also true, but I also would argue against, if people wanted to argue that you should just let free market capitalism rule without any kind of government intervention as to what can be charged for these things, I would say, well, these things are already benefiting from government intervention, as I was describing earlier. And so society has made a decision that we have a public interest in the development of these things. And I think that means we have a public interest in regulating the boundaries by which you can price them so that people aren't being gouged. And I think that is an appropriate role. That's a political statement on my part, but I do think that is an appropriate role of government, is to kind of even out the ebbs and flows. Government and society has the ability to take a long view that business doesn't. And so I think that's where there is an appropriate government role for that. But if you set all that aside and you take it out of the realm of, I think that is kind of, as Tammy was getting at, that means medicine is one of those things that is a special case where it perhaps justifies more of a regulated government intervention type of economic process and how we think about the pricing of medicine. But as kind of Charlie asked, how could these kinds of scenarios relate to kind of our everyday small business environments? And I think one of the corollary thought processes is that I hear sometimes in talking with businesses that I don't totally agree with myself is the idea of a relative value and relative pricing. And the concept there, and I think particularly in our industry with accountants, you hear this idea that, well, the value of your services is dependent on who you're providing them to. And so it may be that one buyer values your services more than others because of their particular circumstances, and therefore you can charge more to one person versus the other based on the circumstances. And what I say about that, I think any business, whether they do it in our industry with a service or with a good or anything like that, I think that I guess I see it just much more mathematically. I think it's much more the case that there are market inefficiencies that you can take advantage of, and those things could be short-term shortages, and there could be shortages of a product or service that allow you to take advantage of that and charge a higher price. There could be just ignorance or lack of information in the market that you're dealing with. Like the people that you're actually working with don't have the network or the information stream, the data stream to understand understand where else they could get what you're providing, and what the prices would be for what you're providing. And because of that lack of information that they have, that could lead you to being able to charge them more than you might otherwise if they had more information. And I think that's the real truth about this whole idea of relative pricing. I think actually revolves around those kinds of things, like short-term shortages or relative inefficiencies or asymmetric information problems is really what creates these differences in pricing. And so a purebred capitalist might say, well, okay, that's fine, but whatever that cause is, you should be able, it creates that value in that moment, that relative value in that moment, and therefore you should be able to take advantage of it. I'm not totally against that, but I see it, I'm amoral on this issue in the sense of my answer might sound moralistic, but it's not, because I'm always looking for business practices that scale. And so when people take advantage of those things from a pricing standpoint, I call it doing business based on unicorns. And you can't scale a business that's based on unicorns. And so I see that all the time where a small business has one or two kind of really good deals where they're arbitraging the other party's lack of information or a shortage in some market space or whatever, and they're getting a great, they're getting a great price. They're getting much more than they would get in any other circumstance. And then they spend the rest of their careers or the rest of their business cycle trying to repeat those unicorn situations. And it doesn't work because they are by definition unicorns. And so I don't believe in building my business on unicorns. It's like, and so I think it's easier and more straightforward to assume for me that it's not a relative pricing market. It's not a relative system, that everybody kind of has similar information. And I'm not going to treat the counterparties in my business. I'm not going to try to figure out that they don't know as much as the other person, and therefore I'm going to charge them more. I'm just going to be like, well, I'm going to assume you all know the same thing, and I'm going to charge you all in a very similar way. And if you don't know, then I'm just going to educate you through my sales process. And, and that's just my choice on it, because I would rather have more clients that are paying me an objectively fair price that can be verified by looking at how that price works out in the marketplace than a few unicorns that I'm just hoping they never figure it out.
No, exactly. I think that's exactly right. And not to mention that, even if you get away with the unicorns, you end up living in fear of whatever the consequences are. In this case, I mean, it depends on what we're talking about. But, in his case, he got away with some money for a while until it caught up to him. And I think that in business, sometimes when you end up finding those unicorns, that just ends up costing in the long run, because you get away with it the first time, then the next time the guy realizes whatever happened and isn't that ready to do business with you again. So it's just more on your point, but I just want to say I agree. Do you have another article we can talk about, Tammy?
I do. And this actually is going to probably continue our conversation about pricing and price increases, because I found an article from Yahoo Finance that is predicting an increase of Amazon Prime subscription fees. So in the past, Amazon has raised their annual subscription fee by $20 two times, one in 2014 and the other in 2018. It is expected to do the same in 2022, causing members to pay $139, which is almost double the price from when it originally first launched back in 2005. And as many as you know, and kind of how we talked about a little bit just before taking a price increase, a company often does a lot of analysis to determine the price elasticity of a new product or service, and trying to estimate the impact of a price increase, that it will have on future sales. In my experience, there has always been an expectation that we may lose some customers due to the higher prices. So we would often communicate a price increase to customers well in advance, and often included a detailed justification for those price increases. According to this article, though, Amazon Prime is one of the few services that doesn't see membership decline after a price increase. They actually see an increase of use for their memberships. What I found really interesting about this article was the debate as to how much a customer is willing to pay for their Amazon Prime. And it's speculated that $150 a year is the max, but some say avid Prime users would pay up to $250 a year. Some financial analysts calculated the value of being a Prime member, and according to their calculations, people would pay up to $785 a year for Amazon Prime. The value of Prime membership differs from person to person, so it really depends on how much someone's utilizing the services offered through that platform. So, in kind of maybe bringing home our conversation about price increases and calculations, do you think a typical customer would actually calculate the value that they see that could, in terms of what they're actually getting from that platform, to justify a fee increase, or do they even really care at this point?
I'll give my opinion. I think that people generally at this point don't care, because I think it's different when the product that we're talking about repricing is a potentially unlimited use product, which I don't actually think it necessarily is. But I think, like, when you're buying food, you're getting a known quantity of something. And if you pay more, you're just paying more for that known quantity. Whereas if you buy Prime and you think to yourself, oh, I'm going to ship however many things I would get this year, and then they jump the price, I think what you think to yourself is, I'll just use it more, get my value out of it. And that thought doesn't really apply to a lot of products that don't have that theoretical unlimited use. I can see the same thing happening with like games and software subscriptions and other products that just don't have that tangible use case. I think the other thing is that, as much as I maybe don't want to admit it, but I think they've really created such a strong kind of monopoly when it comes to that service, even though others are trying to get into it. I know Walmart is trying to get into this and other places are as well. But, they've really just have dominated that space. And I think that is part of, people would be willing to pay it because of that. It's hard for others to compete with that. But what do you think, Ty?
Yeah, I mean, I think it is relative to I think how much analysis or how much thought somebody puts into it is relative to their own, each person's own financial situation, and how much money they otherwise are kind of spending through the Amazon system, or the volume that they're doing through the Amazon system, right? Because if you're doing a pretty high volume, then, the Amazon Prime fee as a percentage of the dollars you spend on Amazon is so little that it's probably not worth too much analysis, right? For me, my family buys a lot through Amazon. We get a lot of packages throughout the week. And so, yeah, I mean, it wouldn't be even worth giving it a second thought in terms of what that is, right? But if the fee was if we were talking about a much more significant fee, then sure, yeah. But I mean, I'm not the average person. I'm an accountant, right? So I would definitely do the analysis of, okay, what are we actually saving by being a Prime member, and how many packages do we have shipping on, and what does that discount equate to, and all that kind of stuff, and kind of put it in a spreadsheet and pencil it out and all that. But it's got to reach some kind of threshold before I would bother doing that, because you just kind of know intuitively that it for sure still pencils out when it's at the level that it's at right now. But it depends on your volume. If you only get like one package a year, then it may not be worth it. Although I relate this to packages because I don't use the other Amazon Prime services, but I think you can watch Amazon Prime videos, and there's other stuff you could be doing with the membership that I don't necessarily myself participate in. So I think of it in terms of, what does it do for me in terms of my shopping on Amazon?
Well, if anyone is curious, the article does give some great tips about how you calculate your usage, how many packages you buy, all these reports that you could kind of utilize to see if you are getting your true value out of there, if you do decide to do that calculation to see if it's worthy. Because I think, to your point, Ty, like increasing it by another $20 this year after a 4-year increase, it's still, under $200. Most people are probably not going to balk too much of that. I would probably argue if it gets up to $800 a year, or if it went from $150 to $800 a year or something like that, that people would be a little bit more, wanting to take the time to look at that to make sure that still made sense for them. But I do think that there is a lot of tools out there to kind of see actually, are you getting value or are you not getting value? And, I encourage all consumers and customers to think about that with whatever they buy, whether it be through Amazon or through other types of products and services. All right, Ty,
Yeah.
I think we
Yeah,
have our
100%. I think, yeah, if they were to try to test that $700 to $800 threshold, then I'd want to do my own calculation on that for sure. I agree. Yeah. All right. Well, I've got an article here on PPP fraud that, you'd think by this time we'd be done talking PPP, but PPP stuff keeps coming up in the news as it gets debriefed now, right? This will probably be the year of PPP debriefing, where we'll probably continue to hear lots of things about what the program turned out to do or not do, and how it rolled out. And we've talked before in this program that it undoubtedly, because of how fast it was rolled out and how it was administered, it undoubtedly was open to fraud and had some fraud in it. And so this case of fraud is not overly surprising that it could have occurred. But the reason I bring it up is just because of the local aspect to it. We're sitting here in the Portland, Oregon metro region, and this fraud happened out of Lebanon, Oregon, is where the fraudster was, and then the case was tried or brought to federal court in Eugene, Oregon. So in this particular case, let me see if I can grab the name of the person on here, or the name of the case at least for us. Okay, so the person's name was Andrew Aaron Lloyd. And so, like I said, he was from Lebanon, Oregon, and he took out, it sounds like he took out about $3.4 million in PPP lending. Or it says at the top, yeah, I'm calling it PPP lending. Yeah, it is PPP because they said Paycheck Protection Program. I wasn't sure off the top of my head if that were the case or if it was a combination of PPP and maybe the SBA EIDL program, but it sounds like it was the Paycheck Protection Program that Lloyd got $3.4 million from by filing fake applications. So, I mean, that's where these frauds start. Is they start with the way they obtained the money was fraudulent to begin with, and then the way they used it was not in keeping with the intentions. And so in this case, he fraudulently obtained the money by creating kind of fake businesses and using the IDs of family members and associates and those people didn't know he was using their IDs, and so he was using identity theft as well as part of what he was doing to obtain this 3.4 million. But he used that money to invest in real estate, and notably in like 15,740 shares of Tesla stock. And in doing that, he ultimately grew the investment. And so by the time he basically was brought to justice, and this whole thing was kind of stopped, he actually grew the whole thing to 18 million. And so, and the government has seized his assets and everything on this. So he's not keeping what he grew here, and he's actually going to prison as well. And I think what's I guess interesting, or a side note about that point, is that it's like, well, it's not all's well that ends well, right? Like, he didn't lose the government's money. He could just pay it back to them, but that it doesn't work that way, right? Because his basis for obtaining it in the first place and the risks that he took were not his risks to take. And so he's getting the punishment for that, and he's not being able to keep any of the rewards involved in it. And so despite the fact that he didn't ultimately lose the money, he still loses. And I guess I'll throw that back to the team here. If do we think that's the right result?
I mean, I don't know. It's hard because on the one hand, I feel like he deserves to lose 100% of anything that happened as a result of him receiving money he shouldn't have received. I believe that. I think that's true. But then when I try to think about the flip side of that question, had he then turned around and lost the money, would that then somehow absolve him of what had happened? And I would say no. And so I guess it comes down to like sort of valuing the theft. And in this case, it's like, well, while that theft grew from 3 million to 18 million, the original theft was 3 million. That's the original basis. What he does with it after that, while interesting and while it sort of ups the stake of the discussion, I don't know that I think it makes sense that, yeah, I guess I don't know what to do with that money other than take it from him, but it feels weird, right? It feels weird if you go the other way. If he were to lose it. So I don't know. I think it's an interesting point for discussion. I'm not sure that I have the answer. Let's hope that Tammy does. What do you think, Tammy?
I don't know if I have the answer either, but I think when I think through this a little bit, I would say that the original theft was the original money that he received. And so that obviously should be what's given back. But at the same time, too, any gains or benefits that you get with that with illegal funds is not yours to keep either in that sense to me. So I would argue that he should lose everything and anything that's associated with that particular gain from his original crime.
That makes a lot of sense. It's very
Sounds like we're all in agreement. So, and yeah, he lost that and more, 4 years of life in prison. Although I didn't catch, he might be able to get some kind of parole at some point here, but that's where it stands today. All right, well, I'll kick it over to Charlie.
All right, so I have a little bit more of a lighthearted article here from Accounting Today, known for their very lighthearted articles. AI-powered tax platform April launches after 10 million seed round. And so what's happening is that, yeah, there's a tax platform that's hoping to use AI and to use integrations with different financial providers. So that would be like banks. It would also be like tax preparation software and whatnot. And it wants to partner so that it can streamline the tax preparation process and more closely align it with financial wellness, according to them. It gives some blurbs about how it does that, although, to be honest, they're not going to be as helpful as they could be because they're all just filled with buzzwords, but says that it uses natural language processing and human assisted AI, along with partnerships, and to accomplish that goal. It was founded by former Deloitte fintech strategist Ben Borodock and Daniel Marcus, former acting CTO of the startup Waze. So it's got some definitely strong backing from that sense. And basically, the owner goes on to the co-founder, Borodock, went on to basically say that for most individuals, the tax prep filing process is really cryptic and they're not really able to use it in their everyday life. And so, you have this issue of tax is like a crucial asset or liability on their balance sheet, but they're not really able to have any visibility into it throughout the year. And so they think they can fix that with all of these different integrations. It's kind of catchline is that it's time to bring taxes into the digital age. And so I guess what I want to ask to you all is his premise true? If real-time information about your tax liability was available, like if ADP and TurboTax were plugged in, for example, would that be a popular product with consumers? Do you think that consumers would actually go on and do their projected tax return at the individual level using a software or pay money to do an analysis like that? What do you guys think?
I think it depends on how complicated their tax situation is. I think, your average W-2 employee, I think, assumes that their tax liability kind of lines up with their withholding anyway. And so I don't think that's really much of a question that they have, other than the only question that they may have is, does it not align with my withholding? And, should I adjust my withholding in some regard, but yeah, I think for a lot of straight W-2 employees that don't have a lot else going on in their financial tax lives, I doubt that is that much of a question. I think, and then you get into the high net worth individuals that maybe are W-2 employees, maybe not, but they're investors and they've got a lot of different things flowing to their tax returns. And yeah, I definitely do think that is a question for them. And the tax the tax firms that they work with already attempt to answer that question. So, that's a common CPA firm service, is to provide these tax projections either quarterly or sometimes monthly, depending on the nature of the client. It depends on how complicated and how much complicated that client situation is, and how much money that they're trying to protect from taxes is, or that they're trying to manage with the taxes is, as to how much they're doing it. So I think this is a good tool. Is it a tool for the everyday consumer, or is it a tool that makes a service that already exists more efficient? I think is probably the question. And I think on the business side, I think, this is part of what we do with clients. We do, in terms of what we call our CFO advisory service, we work with small businesses to project and maintain their cash flow projection about what they expect to have in cash, and how much cash they expect to have available for owners, and how much cash they expect to have for reinvestment in the business. And we do that on a kind of a 12-month outlook, and we update it every month. And part of that discussion, of course, is what we kind of estimate the tax will be. So again, if this software was doing it for businesses, I could see it as a tool that would make the kind of work that we do with small businesses more efficient, and in some cases more accurate, because we don't necessarily do it at the same level of detail that a tax return preparation software would do it. So yeah, I mean, I think, I don't know. I don't think these kinds of things create new markets. I could be wrong. I think they perhaps provide better service to a market that already exists, that's already getting a similar service, and maybe this can improve that service.
I think you and I are on the same page, Ty, because when you were thinking about that, the key thing that kept on popping out to me was the word discussion, right? So a lot of the stuff when you're doing tax planning and you're looking at things, it is a discussion. It's not just you're getting a number and you're kind of calculating it and utilizing that. Some people may utilize that as a tool, but I think it'd be a very basic need. And to most people, they don't need that a separate tool to do that. They're just kind of going with what they're utilizing in a standard kind of way. But for those who would probably find this really useful, I think that the secondary piece is they're going to want that discussion factor of it, which you may not be able to get with an AI tool like that. So I don't think it replaces those services that people are probably already utilizing, and or if they're not, that they would be going to a person versus a software.
Absolutely. No, I agree. So it'll be interesting to see how that all plays out. All right. Do you have another article we can talk about?
I do. So this is from CNN Business, and it's regarding Oscar Mayer's bologna face mask. It quickly sells out. So I'm not sure how many of you remember Oscar Mayer's bologna. You might have had it in a sandwich with some mustard and some cheese, but there's a few of us as children that would probably chomp off little holes for our eyes and our mouth and make a bologna mask. Over the years, that particular product has been declining in sales and in value. Back in 2019, Kraft, who owns Oscar Mayer, wrote down the value of Kraft and Oscar Mayer brands by $15 billion. They recently partnered, though, with a skin company to launch a moisturizing face mask. Wait for it, it's bologna inspired. The packaging, the color, the shape of the mask all resembles the Oscar Mayer's bologna food product, but it's not edible. What I thought would, when I originally read this, I was like, there's no way that this is going to sell. But I was wrong. It sold out in less than 24 hours. And there is talk that they will be producing more soon. So we've talked about, companies needing to pivot when facing a decline in sales or changes in consumer taste. But would you have expected this? Could this really be a short-term novelty play, or could Oscar Mayer pivot into the wellness sector?
I mean, yeah, it's counterintuitive to me. I personally have never used a face mask, but knowing people who have, who I love and respect, I anecdotally would say I wouldn't expect them to grab something off the shelf that was called a Bologna face mask. So I find the whole thing a counterintuitive play, but yeah.
Yeah, and I'm kind of with you on that. I think it seems a little much. And as far as like a pivot goes, I mean, I guess I feel like it's too gimmicky to be a true pivot. I mean, you know, Netflix did a true pivot of switching business models to something in the same realm, but literally different, changed the whole company. In this case, it sounds much more likely that this is just sort of a gimmick sort of thing. And I'm also like real questionable on how likely I guess I don't see why people, if they did pivot to providing health and wellness, I don't think their name brand recognition that they've kind of built up in the food market really gives them much value in that arena, because the only value it has is this nostalgic thing we're talking about now. But in terms of for everything else, everyone who sees a craft cosmetic is not going to think luxury cosmetics. They're going to think baloney cosmetics. And so I don't know, for me, it's just not a good look.
And I have to say, like a Bologna face mask, it has like a Hannibal Lecter feel to it. I'm not, like I said, counterintuitive.
Yeah. Well, you'd be happy to know that a lot of people who I watched a lot of videos on this after reading the article, and the reviews on the face mask is not very good. It's very similar to, they didn't like the idea. They feel like it's gross. And I do use face masks. So like even the thought of, you don't want bologna on your face, and I don't want anything resembling bologna on my face. But yeah, a lot of it was pretty negative. And so this is probably a short lived, although you will have, you have to say it did get them, back in the news and talking about bologna and making you think about maybe that's what you want for lunch today.
All right, everybody, that's going to do it. This has been another episode of the None of Our Businesses YouTube show and podcast. Please tune in again next week for more business updates from an accountant's perspective. And also check out our sister podcast, Profitless on Purpose, where they're talking everything and anything relating to the nonprofit space. Thank you.
Bye.
Bye, everyone.